Something is happening right now that could flip everything you have been told about the future of the dollar. For the past 2 years, you have heard the same story over and over again. The dollar is dying. BRICS is building a new financial system. China and Russia are dumping treasuries. Gold is going to the moon because the world is abandoning American currency. That narrative drove gold past $5,500. It pushed silver above $121. It convinced millions of investors to bet everything on the collapse of American financial dominance. But what if I told you that the architect of de-dollarization, the man who started this entire movement, is about to flip sides? What if I told you that Vladimir Putin is negotiating right now to bring Russia back into the dollar system? What if the entire foundation of the de-dollarization trade is about to crumble, and most investors have no idea it is coming? This is not speculation. This is not theory. There is a document circulating in financial circles right now called the Dmitriev Memo. It outlines the terms under which Russia would return to SWIFT, settle oil transactions in dollars again, and effectively abandon the BRICS currency project that China has been building for the past decade. If this deal goes through, and there are serious people who believe it will, we are looking at the most dramatic reversal in global finance since Nixon closed the gold window in 1971. And the implications for your money, your investments, and your understanding of where the world is heading are enormous. Let me show you exactly what is happening, why Russia is considering this move, what it means for China and the rest of BRICS, and how this could reshape everything you think you know about the future of the dollar and hard assets like gold and silver. I am Kenzo John AG, and this is Market Acme. Let me start with what we know. For the past 3 years, the dominant narrative in financial media has been simple. America is printing too much money, the national debt is exploding, foreign countries are dumping treasuries, BRICS nations are building alternatives to the dollar, gold and silver are the only safe havens, and the dollar's days as the world's reserve currency are numbered. This narrative is not entirely wrong. The United States does have $36 trillion in debt. The government is running $2 trillion annual deficits. Interest payments alone now consume $1.4 trillion per year. These are real problems that will have real consequences. But here is what most people missed. The de-dollarization movement was never really about economics. It was about geopolitics. It was about Russia and China trying to escape American financial control after the West froze Russian central bank assets following the Ukraine invasion. And now, the geopolitical calculus is changing in ways that almost nobody predicted. Let me show you what is actually happening on the ground right now. The Federal Reserve just released meeting minutes that signal they are in no hurry to cut interest rates. Fed officials Susan Collins and Thomas Barkin both stated this week that holding rates steady is appropriate given persistent inflation risks and an improving labor market. The dollar index responded immediately, rising to 97.8 and holding firm. At the same time, the United States just implemented a new 10% global tariff that took effect Tuesday. The White House is reportedly seeking to raise that to 15%. This comes after the Supreme Court struck down Trump's reciprocal tariffs under the IEEPA framework, forcing the administration to shift to Section 122 tariffs instead. Now here's where it gets interesting. This tariff shift has created legal uncertainty. Commerzbank analyst Volkmar Bauer argues that the move to Section 122 tariffs puts the administration on shaky legal ground. These tariffs could be challenged in court, they could be struck down, and if they are, the revenue the government is generating from them could have to be repaid. That creates fiscal uncertainty on top of political uncertainty. But here's what nobody is talking about. While everyone focuses on tariffs and Fed policy, something far more significant is happening behind closed doors. Russia is negotiating its return to the dollar system. The Dmitriev Memo, named after a senior Russian economic official, reportedly outlines a framework where Russia would resume oil sales in dollars, rejoin the SWIFT payment system, and receive sanctions relief in return. If this happens, and there are credible sources suggesting negotiations are serious, it would be the most significant reversal in global finance in half a century. Let me explain why this matters so much. The entire de-dollarization narrative rests on one assumption, that major economies like Russia, China, Saudi Arabia, and others are permanently moving away from the dollar, that they are building alternative payment systems, accumulating gold, and preparing for a world where the dollar is no longer dominant. Russia was the catalyst for this movement. When the West froze Russian central bank assets in 2022, it sent a message to every country in the world. If you anger America, your dollar assets can be seized. That message terrified central banks everywhere. It accelerated gold purchases. It drove BRICS expansion. It fueled the entire narrative of dollar decline. But here is what nobody expected: Russia might actually want back in. Let me show you why Putin would consider this. Russia has been selling oil to China at a significant discount. Some estimates suggest Russia is selling crude to China at 30 to 40% below market prices. China has enormous leverage because Russia has nowhere else to go. European markets are closed. American markets are closed. India buys Russian oil, but at even steeper discounts. China is the only major customer left. This is what analysts are calling the yuan trap. Russia escaped dollar dependence only to find itself completely dependent on China. And China is not a generous partner. They are extracting maximum value from Russia's desperation. The yuan is not freely convertible. It cannot be used to buy goods on global markets the way dollars can. Russian companies holding yuan struggle to spend it outside of China. The currency Russia accepted to escape the dollar has become a prison of its own. Now imagine you are Putin. You started this de-dollarization movement to escape American control, but you traded American control for Chinese control. And China is squeezing you harder than America ever did. Your economy is struggling. Your currency is weak. Your companies cannot access global markets. Your technology sector is starving for components you can only buy with dollars or euros. What do? You go back to the Americans and negotiate. You offer to return to the dollar system in exchange for sanctions relief, swift access, and the ability to sell oil at market prices to global customers. That is exactly what the Dmitriev memo reportedly proposes. Let me be clear about what this would mean. If Russia returns to dollar settlement for oil, it would be the most dramatic validation of American financial power in modern history. The country that started de-dollarization would be admitting that there is no viable alternative. China's dream of yuan dominance would suffer a devastating blow. The BRICS currency project would lose its most important champion. Gold and silver, which have been surging on de-dollarization fears, would face massive selling pressure as the fear premium evaporates. And the dollar index would likely surge to levels not seen in years. Now let me show you how this connects to what the Federal Reserve is doing right now. The Fed is holding rates steady. They are not cutting despite market expectations for 3 rate cuts this year. Why? Because they see what is happening. They see inflation risks from tariffs, they see a labor market that remains resilient, and they see geopolitical developments that could actually strengthen dollar demand rather than weaken it. Fed Governor Christopher Waller stated explicitly that leaving rates unchanged could be appropriate if the labor market continues to improve. That is the Fed telling you that rate cuts are not coming anytime soon unless something breaks. And right now, nothing is breaking. The economy is growing, employment is solid, and the dollar is strengthening. Here is what most investors do not understand. A stronger dollar is not necessarily bad for America. It makes imports cheaper, which helps control inflation. It attracts foreign investment into dollar assets. It reinforces dollar dominance in global trade. Yes, it makes American exports more expensive. But in a world where America is the consumer and everyone else is the producer, a strong dollar gives America enormous purchasing power. The Fed understands this. That is why they are in no rush to cut rates and weaken the dollar. Now let me show you the China angle, because this is where it gets really interesting. China has been the biggest beneficiary of Russia's isolation. They have been buying Russian oil at massive discounts. They have been expanding yuan settlement. They have been positioning the yuan as a dollar alternative. But if Russia flips back to the dollar, China loses all of that. They lose their captive energy supplier. They lose their showcase example of de-dollarization working. They lose credibility with every country they have been trying to recruit into their financial system. This is why the potential Putin-Trump deal is so explosive. It is not just about Russia. It is about the entire architecture of the alternative financial system China has been building for a decade. If Russia defects, other countries will question whether BRICS is viable. They will wonder if they should be reducing dollar exposure at all. They will reconsider their gold purchases and their treasury sales. The entire narrative flips. Let me show you what this means for gold and silver, because I know many of you are holding these assets. Gold hit $5,500 recently. Silver pushed past $121. These are historic highs driven primarily by 2 factors. First, fear of inflation and currency debasement. Second, the de-dollarization trade. If Putin returns to the dollar, the de-dollarization premium in gold and silver evaporates overnight. We could see gold and silver crash 20 to 30% as traders unwind their positions. Silver could fall from current levels toward the $54 to $64 support zone. Gold could drop several $100s per ounce. This would not be because the fundamentals have changed. There is still a 67 million ounce silver deficit. China and India are still accumulating physical metal. The debt situation in America is still unsustainable long term. But markets do not trade on fundamentals alone. They trade on narrative. And if the de-dollarization narrative collapses, the fear premium collapses with it. Here's what I want you to understand. This is not the end of the gold and silver story. This is a potential reset. A chance to buy hard assets at dramatically lower prices before the long-term fundamentals reassert themselves. Because here is the truth. Even if Putin returns to the dollar, America still has $36 trillion in debt. America is still running $2 trillion deficits. Interest payments are still consuming over $1 trillion annually. The fiscal situation is still unsustainable. Those problems do not disappear because Russia rejoins SWIFT. What changes is the timeline. What changes is the urgency. What changes is the immediate fear premium that has driven gold and silver to record highs. Now let me show you the tariff situation because this adds another layer of complexity. The Trump administration just implemented a 10% global tariff. They want to raise it to 15%. But the legal foundation is shaky. The Supreme Court already struck down the EPA tariffs. The new Section 122 tariffs could face similar challenges. Commerzbank warns that these tariffs might have to be repaid if courts rule them illegal. That creates fiscal uncertainty for the U.S. government. It creates policy uncertainty for businesses. It creates investment uncertainty for markets. But here's the interesting part. Lower tariff uncertainty actually gives the Fed more flexibility. If tariffs are reduced or eliminated, imported inflation falls. That gives the Fed room to cut rates if needed without reigniting price pressures. So paradoxically, the tariff chaos could end up being dollar positive if it results in lower trade barriers and lower inflation. Let me show you how all of this connects. We have the Fed holding rates steady, which supports the dollar. We have Russia potentially returning to the dollar system, which would massively boost dollar demand. We have tariff uncertainty that could resolve toward lower inflation, giving the Fed flexibility. We have China losing its captive energy partner if the Putin deal goes through. We have BRICS losing credibility as a dollar alternative. And we have gold and silver potentially facing a significant correction as the fear premium unwinds. This is a perfect storm for dollar strength, not dollar collapse, dollar strength. Now I want to be clear about something. I am not saying the dollar's problems have disappeared. They have not. The debt is real, the deficits are real, the long-term fiscal trajectory is unsustainable. At some point, there will be a reckoning, but that reckoning might be years away. And in the meantime, the dollar could strengthen dramatically as the de-dollarization trade unwinds and global capital flows back into American assets. Let me show you what the smart money is doing right now. Institutional investors are watching the same developments I just described. They see the Fed holding firm, they see the Russia negotiations, they see the potential for a complete reversal of the de-dollarization narrative, and they are positioning accordingly. Wall Street analysts at Evercore are already rating energy majors like ExxonMobil and Chevron as buys, anticipating that a Russia deal could give American companies access to frozen Siberian and Arctic projects. We are talking about billions of dollars in reclaimed assets. We are talking about the Sakhalin-1 projects and Arctic drilling rights that have been frozen since 2022. If American companies re-enter these fields with advanced U.S. technology, it would effectively back the dollar with Russian energy output. Petrodollar 2.0. Here is what this means for uranium as well. A return to the dollar system would likely involve lifting sanctions on Russian nuclear fuel. Russia controls 44% of global uranium enrichment capacity. If that supply floods Western markets, uranium prices fall. But before they fall, they could spike dramatically. Right now, there are Russian, American, Chinese, and Iranian naval assets concentrated around the Strait of Hormuz. The third round of U.S.-Iran nuclear talks is scheduled in Geneva this week. Any escalation could send energy and uranium prices surging before any peace deal brings them crashing down. Let me bring this to your level because this is what matters. Your money, your investments, your decisions over the next 12 months. If the Putin deal goes through, we are looking at a potential crash in gold and silver prices. We are looking at a surge in the dollar index. We are looking at massive gains in American energy stocks. We are looking at a complete reversal of everything you have been told about the future of the global financial system. But if the deal falls apart, if negotiations collapse, if Russia stays aligned with China, Then the de-dollarization trade continues. Gold keeps rising, silver keeps rising, the dollar keeps weakening. The narrative you have heard for the past 2 years plays out exactly as predicted. This is why I called this a defining moment. We are sitting at a fork in the road. One path leads to dollar resurgence and hard asset correction. The other path leads to dollar decline and hard asset explosion. And the decision is being made right now, in closed-door negotiations between Washington and Moscow, in Federal Reserve meeting rooms, in courtrooms deciding the legality of tariffs. You need to be prepared for both scenarios. Here is my view. I believe the fundamentals for gold and silver remain strong over the long term. The structural deficit in silver is real. 67 million ounces in 2026. You cannot print silver for AI data centers and solar panels. China is buying physical metal for strategic reserves, not for trading profits. India is accumulating gold at record pace. The debt bubble in America is real and will eventually burst. These fundamentals do not disappear because of geopolitical shifts, but in the short term, narrative matters. Fear premiums matter. And if the de-dollarization narrative collapses, we will see a significant correction in metals prices before the fundamentals reassert themselves. That correction is an opportunity. It is a chance to buy hard assets at discounted prices from panicking sellers who do not understand that short-term political shifts do not change long-term physical reality. When silver drops to $54 or $58 because headlines say the dollar is saved, that is when you buy. When gold drops $500 because Putin rejoins SWIFT, that is when you add to positions. Because here's the truth that nobody wants to admit. No deal with Russia can fix America's fiscal problems. No return to petrodollar can erase $36 trillion in debt. No geopolitical shift can make $2 trillion deficits sustainable. The day of reckoning is still coming. It might just be delayed. Let me show you what I am watching over the next 3 months. First, the Geneva talks this week. If Iran negotiations succeed, that removes one source of geopolitical risk and could pressure gold prices lower. If they fail, gold spikes. Second, any official announcement about Russia-US negotiations. Right now, this is rumor and memo. If it becomes official policy, markets will react immediately. Third, Fed commentary on rate policy. If they signal any shift toward cutting, the dollar weakens and gold strengthens. If they stay hawkish, the dollar stays bid. Fourth, tariff legal challenges. If courts strike down Section 122 tariffs, fiscal uncertainty increases, and the dollar could weaken despite other factors. Fifth, labor market data. The Fed is watching employment closely. Any significant weakening would revive rate cut expectations and pressure the dollar. Each of these factors could shift the balance. That is why this moment is so critical. We are not in a stable equilibrium. We are in a transition period where multiple possible futures are competing. And the decisions you make now, based on how you read these signals, will determine whether you come out ahead or get caught on the wrong side of a massive market move. Let me pull this together. For 2 years, you have been told the dollar is dying. BRICS is rising. Gold is the only safe haven. That narrative was not wrong. It was based on real trends, real policies, real shifts in global finance. But narratives can change. Trends can reverse. The architect of de-dollarization might be about to abandon his own project. If Putin returns to the dollar, if Russia rejoins SWIFT, if the petrodollar is reborn, everything you thought you knew about the next decade of financial markets needs to be reconsidered. That does not mean gold and silver are bad investments. It means the timing and trajectory might be different than you expected. It means the path from here to there might include a significant correction before the ultimate destination of higher prices. I want you to think about this carefully. The world is not black and white. Dollar collapse or dollar dominance. Both extremes are probably wrong. What is more likely is a messy, volatile transition period where the dollar strengthens in some phases and weakens in others, where gold rises dramatically and then corrects sharply and then rises again, where nothing moves in a straight line and everyone who is certain about the future gets humbled by reality. That is why you need to stay informed. That is why you need to watch developments closely. That is why you need to be ready to adjust your positioning as new information emerges. Because in markets like this, flexibility is survival, certainty is dangerous, and the people who make money are the ones who see the shifts before everyone else. The Fed is holding firm. Russia is negotiating. The petrodollar might be reborn. Gold and silver could face a significant correction before their ultimate rise. The dollar could strengthen dramatically before its ultimate decline. These are not contradictions. This is how markets actually work. Short-term moves often go against long-term trends before the trend reasserts itself. The question is whether you understand this dynamic and position accordingly, or whether you get caught on the wrong side of a move you did not see coming. I am Kenzo John AG. This is Market Acme. Subscribe now and join our WhatsApp community for real-time updates as these developments unfold. Because what happens in the next few weeks could determine the trajectory of markets for the next few years. And you do not want to be watching from the sidelines when the move happens. The dollar is not dead. It might just be getting started on its next major rally. And if you understand what is happening, you can position yourself to profit from both the rally and the eventual reversal. That is how you win in markets like this. Not by being certain, by being prepared. Stay tuned, stay informed, and stay ready. Because this story is just beginning.